Thank you for listening to the Business and Beyond podcast.
We appreciate all of our listeners. If this is your first time listening to the Business and Beyond podcast, we hope you enjoy this episode. Episode 58 of the Business and Beyond podcast is brought to you by Apogee Grafix. Ashton here in the studio now with Tony, ramping up podcasting season, going here right through spring into summer. And, things ramping up just in general as they do in life with getting out of winter, going into spring, and everybody with summer plans.
Yeah, now we're, some people, this is their last week, kids, last week of school, or last 2 weeks in some cases. So, yeah, summer's here.
And prices going up with
that, wild, which is everything increasing. Yeah,
imagine.
Why are we seeing prices continue to increase everywhere and people are blowing and going just as fast? I mean, why is inflation not slowing down the economy?
Yeah.
Do we know?
You could, if you look at Facebook, you wouldn't imagine that would be the case. You'd think things would be slowing down. People complaining about gas prices. Mm-hmm. People starting to say, hey, people are going to start calling in saying they can't go to work because gas prices are so high. Mm-hmm. And I haven't seen that yet. There's still a lot of traffic. Everywhere you go, there's still the same amount of people, same amount of lines.
Yeah.
Luckily, I don't know how things are at different areas of the country, but as far as I can tell, there's no shortages. I know they say there's a baby formula shortages, but I haven't, I've been to the store a couple of times in the last week, and I was curious just to see, and here our local supermarkets, they don't seem to have a problem. That doesn't mean that, if you look at the logistics of it at supermarkets, that they're not, you have your certain this many days until, we need to replenish, and they may be running, on one day, and it looks like there's plenty. But, and again, if anybody's dealing with that, I'm not trying to say be political or anything, so there's not a shortage, but just, you're talking about inflation, you think things would be getting worse and slowing down, building would stop, but it doesn't seem, people are still buying groceries. People, for the most part, are still driving. I'm sure people have changed their driving habits because, record-breaking gas prices.
Yeah.
And nothing seems to be slowing down at the moment. And given it, if we're going through the exact same thing going into January, second week of January, maybe things typically slow down then anyways after the holiday season. So maybe this is a good time for this to be happening where it's not going to hurt our economy too much.
You mentioned construction or building. I'm in the construction industry, and it hasn't slowed down. And in that industry, there are some shortages. There are some long lead time items, some procurement issues that it just doesn't seem to phase it. Owners just continue to want to build. They want to find other ways, even if it costs more money. They're willing to pay to get their, construction project going and started, even if there are going to be some delays along the way. They're still moving forward. It's not slowing it down. Cost on that, everything in construction are at record highs. I'm part of a group, and they're doing a lot of research, and so we get a lot of data and analytics back from them just throughout all of construction throughout the country. Overall, construction prices are pretty much on the rise, about 5% a month.
Yeah,
that have been all of this year, and even trending and tracking very similar to that essentially the past 2 years or 18 months, since the pandemic. And that's the thing. We started in the pandemic. Things really didn't slow down. I mean, you had little hiccups here through, trying to slow the curve. We continued to grow and grow and grow. There were some shortage issues. Then things start coming back, and people just continue to buy and buy and buy and build and build and build. Going into 2021 was just an incredible, record-breaking year for a lot of companies in sales. We've seen all-time construction highs in contracts that we've written, and then even going into 22 now, through the first quarter and second quarter now, that it just doesn't seem to slow. No matter what the economy's doing, it doesn't matter the gas prices, the grocery prices, any material prices, raw good prices. it just hasn't slowed our industry down. And just like you mentioned, groceries, you have some things, baby formula. There's some odd items that do become short, but overall, stores are stocked.
Yeah. And I remember back when I worked in the building industry, a meeting we had, I think it was near the end of the summer in 2020, wondering because prices kept going up. We had shortages right at the beginning of the pandemic, and we were wondering what's going to happen here. So something has to give. Either people have to stop building, or the economy is going to crash, or the pandemic has to end, and it didn't. I mean, we got a little closer to normal than we were in summer, fall of 2020, but nothing's given up. No. I mean, I think the industry as a whole and most industries have figured out a way to move around this, where there's a lot of basic homes you buy. If you're just going to go out and look for new built homes that aren't custom, a lot of them, at least in this area, DFW area, are getting built just one story. They're not even offering 2-story houses unless you go, any home builder you go to, you think, okay, 1 story, there's a 2-story plan. A lot of them aren't offering that just because there's a shortage on materials. To an extent, it's, I guess they can bring down
and with the lead time of when with the increased cost.
Yeah.
That would make a more affordable home, where a single-story home is going to cost what multi-story homes were costing in the past with the increase in building material.
Yeah, I think they're making just enough of adjustments. Most industries are to push off. I guess we're talking about why hasn't there been a recession yet? And maybe it's coming. Maybe the bottom's about to drop out of all of this. Maybe by the time we post this next week, it's irrelevant. But
that you bring up a good point there. Things are moving so fast, it almost is irrelevant as soon as it's published. As soon as information comes out, as soon as you know something, that's become irrelevant as fast as this. I mean, with fuel prices, you can't even keep up with what they are now.
Yeah, so right now, I couldn't even tell you what fuel price. Last time I filled up last week, which luckily it's all on the company I work for, $4.40 something, I think is what I got, and I haven't been out today, so I haven't driven about. It could be $4.60 something. It could be $4. Yeah. It could have dropped down. I don't know.
We filled Amberley's up yesterday or day before. It was something like that, $4.30, $4.40. I mean, what I noticed was it was $98 to fill up her Dodge Durango.
Yeah.
So $100 to fill up a small mid-size SUV. I haven't even filled my truck up since the prices have been this high. So I don't know what that would be.
I know you're just getting enough. Like, well, maybe next week it's just going to come back down.
You mentioned your company pays for the fuel. How long can companies sustain that? Those are additional expenses.
Yeah.
Something eventually has to give. They don't have endless funds to put out for that. There's certain budgets I'm sure that they have that they know they're going to spend when prices go up like this.
Yeah, at some point something's got to give. I mean, we haven't been told anything, and I work in a position where I'm out all the time driving around, so that there's some weeks I fill up twice. So I haven't been told anything. I know when you're on a limited budget, this is hurting some people. It's got to be. I remember, I would say, struggling, just being tight on money, and there were times I was wondering if I'd had enough fuel to get to work until payday.
Mm-hmm.
And that's back the last time all this happened. I think gas was probably about $3.99. I don't know that it ever went over $4 back then in 2008, at least in North Texas. I know you're talking about California. You're talking about $6 a gallon right now.
Yeah.
In other parts of the country, but other than just people complaining and it's hard for people, but you haven't seen any people abandoning vehicles anywhere because mass abandonments of vehicles because of this.
Well, so we have a family of 5. We made a trip to the grocery store just to pick up some essential things. Like those trips you have, those midweek. Hey, we're going to get essentially a half a buggy of things. Some of the basics and milk, bread, water, any of those type of things. mean, it was a $200 trip for just kind of our basic essential things.
Yeah.
You know, I mean, how do some families, you know, you're spending $600 to $800 probably, the average family, a month in groceries.
And I want to, maybe 3 or 4 months ago, I read an article, an economist had written it saying that because people, you know, because Americans are going to pay it, that maybe, you know, I don't, centralized, whoever that, the central bank, I don't know, you know, talk about printing more money and more stimulus checks, but they were talking about inflation growing. This was before it really spiked. This is kind of like, okay, gas was $3.50 or something. Everything was high. We were paying more, but we were just like, okay, wait, how long till it ends? We didn't imagine it going up this much. And he was saying as long as Americans are willing to pay it, they're probably not going to come back down. To some extent, they might. We might go up, and then it come back. Yeah. But it's never going to be back to the point of pre-pandemic levels. Maybe gas, because I think they told us back in 2008, gas is never going to be back down to $2 a gallon. And I think it got down to like less than $1.50 a gallon within the last couple of years. But overall, I think we're kind of getting into a new normal. Maybe eventually a bottom will fall out and we'll come back down a little bit. But because we are willing to spend, people are still going on vacations. They're still driving to work every day. They're still paying all this. Nobody's just flat out refusing. It's just people, if you can't afford to go out to eat now as much, you're not going out to eat just because you flat out can't do it, not because you're making that choice to do it. And not to make it political, because we're asking why is this happening. You say, well, Joe Biden's in office, that's why. We're just, in layman's terms, just breaking it down. The most simplest form is, why is it? It's because people are paying for it. Now, I'm not saying they're keeping gas prices high for that reason, but in general, everything's kind of staying at a level, and you're seeing major companies having the biggest profits they've ever had. And that comes, you know, that's going to come regardless. It's not just because they're going to keep their prices high and not pay employees. Like, at some point, yes, it gets to that point, but you know, most companies, like our company, whatever we pay, we're going to mark it up at, for a certain tier of companies, we're marking it up 20-something%. Yeah. And, you know, bigger companies, 19% or whatever. So if we go from paying $100 a barrel for something to $200, it still affects us. We're paying more prices, but we are going to make more money in the long run if we sell that same amount, because we have to save a certain percentage to pay the bills. You have to. You're not
going to cut your margin because of the
yes.
higher.
Yeah. And our company has done a good job of giving out cost of living raises just because of inflation. I'm not saying all companies should do that or shouldn't do that. If they can, great. Yeah. Just looking at the bottom dollar and saying, hey, Amazon made this much money, they need to pay. You know, I'm not for or against Amazon in that argument on this platform, but there's a lot more that goes into it. And some companies may look like they're making a ton of money, but their costs may be different. I know if you're just buying product and selling it, just like we are, B2B sales, this could be a good economy for us, because I think because prices go up, you have a better chance of luring other customers away from your competitors, because they don't, you know, you raise your prices, but at the same point, you might lose your customers. Yeah. Service industries, I think, are hurting the most right now because their costs are going. They can raise their prices, but it's getting worse where they're raising for labor. We're just raising for product, and we do have vehicles to deliver it.
Just so they can get employees to show up to work.
Exactly. Yeah. Everybody's really dealing with that right now, just trying to hire. And I don't know if it's gotten any better. It seemed like there's been less discussion on it, but I think it's just a new thing has come up.
It's just a pill that they've decided to swallow and just pay it and not complain about it because it wasn't doing any good.
Yeah, that was before.
You just have to eat the additional cost, and unfortunately, then that pushes everything back up. You know, we start seeing more inflation when that happens too. Because if my expenses go up because I have to pay you more, I have to charge more. Now everything's just going to go up with that. You know, just like raising minimum wage. All that does is drives the cost of everything up and creates. It doesn't give anyone an advantage by moving up in a pay bracket.
Yeah.
It just creates pretty much what we're seeing now is an inflated economy that, I mean, if you're lower to middle class, you're always going to be lower to middle class unless you move yourself up.
Yeah.
Just paying more money doesn't get you out of that because everything follows.
Companies should raise wages. You were talking about what the minimum wage is now compared to what a car costs, what a house costs, is compared to back then. Yeah, that's a big discrepancy. But we're not. You're just saying what the minimum wage is. Honestly, they're, if people are doing what they're supposed to be, there shouldn't have to be a minimum wage, because your minimum wage $15. You can't pay a 15-year-old part-time to sweep up the floor, because you can't pay him $15 an hour to do that. Now, some companies, it works out. You're like, hey, we're all getting paid $15 an hour. But more than likely, what the company is doing, if they're already paying you minimum wage and they are forced to give you a raise because of that, when they should have already given you a raise, they're going to fire a couple of people. Now, yeah, you're getting paid $15 an hour, but now you have a lot more to do. You have more responsibilities. And then they're going to raise the price of their goods. So now it's more expensive. And if you go from $9.50 now to maybe $9.25 to $15, now that $15 an hour is probably more equivalent to what $10 or $11 an hour was. Especially now with, I don't know if everybody raised the minimum wage now in the middle of all this, I think prices go even higher. Hopefully the companies will do the right thing. Managers will give raises. And if they don't, if you're making a minimum wage and you need a raise and you can't get it, get another job. There are jobs out there.
Yeah.
There are lots of jobs out there. You could probably find an unskilled labor job that pays $15, $16 an hour if you're really looking for it, depending on what you want to do.
Yeah.
But honestly, minimum wage jobs are for unskilled laborers, unskilled worker jobs, excuse me. Typically somebody who shouldn't have to be the breadwinner for your family. Now, I know there are people out there, and, I could say what I want, and you're like, well, tough. I'm providing for my family on a minimum wage job. Yeah. And it's hard. There's not a right answer. You say, well, you raise minimum wage. It works out for some people. They get a $5, $6 per hour raise. Some people get fired. It doesn't work out. Some people, everyone's going to raise the prices, so it's not going to work out anyways. It's one of those where I think people you need to find companies that give proper raises for your employees. And then if companies aren't able to hire people or keep people employed, they'll raise it in general, because now you can go to McDonald's, make $13, $14 an hour at certain places. Some places I've seen fast food workers making $20 an hour. And I think I'm not going to say you're the problem. I'm not that kind of person that says you're the problem if you don't do this or you do this. But if you're going to complain about making minimum wage, go work somewhere. Don't let the company tell you you're a bad person for going and taking care of yourself and your family. Let them, if they're not going to give their people the raise, let them not be able to keep people employed, and eventually they're going to have to do it. Yeah. Let them go out of business or give people raises.
Well, after the break, let's talk about what we think is going to happen, or what we think we should see happen to help correct this inflation. We'll be right back. Do you have a cracked phone screen? Go visit my friend over at Zapata's Phone Repair to get that screen replaced. Check out their new store at 312 South Old Betsy Rd in Keene, Texas, or give them a call at 682-228-9274.
Whether you're listening on YouTube or one of our podcast platforms, make sure to subscribe and like this episode, and then in the future you'll get alerts for every time we drop an episode. Before the break, we were talking about inflation and how far does inflation have to go before it slows down the economy, or prices are basically. And during the break we were talking, and easy answer, you can ask anybody whether they know anything about economics, politics, is, well, bottom's got to drop out. We have to have a recession. Mm-hmm. It should, and that's a scary word talking about, because we had the Great Recession, I guess a long time ago. I feel old, like 10, 15 years ago when it started.
Yeah.
Longer than that, actually.
Yeah.
2007, 2008.
Yeah.
And recession just basically means your economy just rescinds a little bit.
It's not growing.
And that's just a normal part of the ebb and flows of our economy. It's just been growing and growing and growing. It can't always grow. Just because we have a recession doesn't mean there's going to be a ton of unemployment. It might, but it doesn't necessarily mean there's going to be a ton of unemployment and everything that went with the last recession.
Yeah.
So in general, you can look at it one way or another. What's going to cause everything to give out? Something's going to trigger it, and there's going to be hopefully just a slight recession. But
yeah, when you say recession, I kind of think of it, and I know many do, is I would use the analogy of like on a balloon. And right now, this balloon we're in is just growing, and it's huge.
And you want to let some out of it. You don't want to.
You want to let it out before it pops. And
or a bubble.
Yeah,
just
how close are we to popping? You know, can we let some out before we just get to the point we're going to burst and everything's going to crash and tumble? And you know, I talk about it with a lot of my coworkers in the construction industry we're in, and something we've said, man, the only way to get construction to slow down and to allow pretty much our issues are production, right? It's just getting products to be able to get them in time, and that's pushing cost up, but is a complete blow up. I mean, we just need construction to crumble to reset itself and almost to push out some of the lower companies. You know, only the strong will survive kind of a situation, is how we've talked about it. But with that, even, you know, so as of, I believe, this week, we have a big manufacturer, and a lot of people, it's a household name, Eaton, a Cutler Hammer Eaton brand. They've announced they're going up 15% this week in products, which is a huge increase, not just small, you know, 1 or 2 points here. We're talking 15%. And they wouldn't come out and officially say it to us. They wouldn't want the general public to know this is the case, but through the grapevine,
so just mention it on our podcast.
Through the grapevine, we've heard that possibly the reason this is the reason they would go up is it's not their expenses are that much higher because they've been going up with cost, is they're trying to slow down orders so that they can catch up, because they can't catch up. And until you can catch up, you know, that would be a correcting factor to inflation, is if you could get products stockpiled, you would slow down the purchasing production line. That would help us catch up. I mean, I don't see us going back to where we were. Yeah. I think costs are just high, but we want to try to slow that just slightly, just so that we can all afford to continue to move forward and grow.
At least give us a chance to, as we were talking about before, get income up to where we are today, where we just kind of even out, where we technically we could be back to where we were 10, 15, 20 years ago.
With the balancing act.
With the balance, yeah.
Expenses.
Talking about your income's higher the same way, and talking about minimum wage doesn't necessarily have to be higher. Yes, that makes it worse for minimum wage workers. Man, I sound real political right now, but just in general, average income needs to be raised too. That's not necessarily going to fix the problem, just help combat it. But no, I work in the oil and gas industry. We get emails every single day from we get it from a media source that Shell Rotel is raising their prices, and Chevron's raising their prices, and then Mobil's raising their prices. There's just all kinds of, it's just ridiculous. You just sit here and you're like, okay, there's another one. But in general, just to go back to the question, anybody listening right now, you can't do anything. You know, one person can't do anything. Now, what you're talking about Eaton's doing, it might help them out, but in general,
unless you saw that across the board.
Exactly. If their competitors don't slow down, all they're doing is missing out on that business, because it's not that there's more available. That extra, how many ever they usually buy, is just going to get eaten up because
by other manufacturers.
Because there's lots of companies that'll say, you know, they just buy what they're allowed to, what's allocated for them to be allowed to buy. And if you could tell them, hey, you could buy twice as much, okay, let's just do it. I don't care.
Yeah, because if Eaton's not putting the orders in for these raw goods, Square D, Schneider will, or Siemens, these other big manufacturers, they will get that, because the raw goods distributors, they want to sell it. They're trying to move product, and if Eaton's not going to take it, they'll absolutely offer it up to anyone that will.
Yeah, and it's there's not going to be a band of companies that end up collaborating and ending inflation. It's, we talk about the Federal Reserve. The Federal Reserve can say that Federal Reserve, sounding weird with the echo on my headphones. They've already been doing, raise interest rates. You do a lot of little bit of stuff to see, hey, does this help? Does it do this?
Yeah.
And they've been working at it. And, we're talking about what caused it. How are you going to fix it? Well, what caused it? And everybody right now listening is just yelling their political position on this or what caused it. But it's, honestly, it's a bunch of different factors happening all at once. You can Google this and look at many different economists, and they all have different answers. Mm-hmm. And if somebody listening has the answer and they think they're right,
they all have different solutions. Yeah.
Message us, call us. We'll interview you.
Yeah, we'll get you on the show to discuss your point of view on it.
But yeah, it all starts out pandemic, shortages of stuff. Not only was there shortages in the middle of the pandemic, but because there were because things were getting shut down, things there weren't shortages of, gasoline at the time. Mm-hmm. Well, people stopped producing as much oil because there's no point.
There wasn't the need.
It got to negative at one point. Was it 2020, 2021? Whenever it was negative. So why am I producing this? It's costing me more money. Mm-hmm. So they stopped. So now when the demand went back up, it's not like you just flip a switch and you just start producing millions and millions of barrels of oil. And you can get political and say, well, we did that. But we're not talking that side of it. You have to get ramped back up and catch up to where we are, and prices raise, and maybe some of that is not necessarily because oil prices are up, but hey, we need the demand to go down. If we get it to $5 a gallon,
exactly,
less people.
I think that's a big factor to it. Is pricing is increasing. They're raising prices just to slow down, just the same as interest rates on homes went up. Now, it's in the fives, I believe. Now 5% range. Yep. That they're raising that just to try to slow it down. I don't know that they're doing a great job at that. I think people are still going all in on homes. So I'm sure they're going to continue throughout this year to raise interest rates as we continue through 2022, and that maybe that's when we see the big crash.
Yeah, we're in unprecedented times. It's never, as far as I have heard. Inflation's never grown this much. I mean, there are decent houses that have just doubled in value over the last couple of years.
I live in one of them.
Which they tell you is you buy a house 20 years from now, real estate, 20 years, it'll double in value, which right now you're talking about value comparatively to where inflation is and how strong the dollar is, what it's worth.
I've doubled mine in 6 years.
But see, if you can do that and we can come back down on inflation a little bit, that's a great deal. And, people say, well, it doesn't matter unless you say, if you're not selling your house, what does it matter? But, you've benefited from it because you refinanced and used a lot to put back in the house. And that's where it is. But in general, you like to have that in your portfolio. Yeah. Whether you're going to sell your house, whether you're going to refinance or not.
It's still an investment.
You don't want to be under on that.
Yeah.
Because there's a lot of times in the recession that people could still pay their bills, but they were underwater in their house. Mm-hmm. They owed more than it was worth.
Yeah.
And
that's a scary situation.
Yeah, exactly. You lose a job. Like you would know right now if shit hit the fan, and at worst you could sell your house and make a pretty buck. I don't know where you're going to move because real estate's ridiculous right now. But you wouldn't be screwed. You wouldn't file for bankruptcy just to sell your house.
Right.
But right now you can't compare it to any other time. Even if we have a recession, that recession, even if it's a big one, is going to be different than this past recession because unemployment's not an issue. It's the exact opposite. It's keeping enough people employed. There's more jobs in there. You would think more jobs than there are for working. We talked about in our episode, we think that there's a lot more people going out there being entrepreneurs, making their own money.
The statistics show that. Yeah. It was last year that there were more new filings for businesses last year than it was like double or triple the amount from the previous year or previous 2 years combined. It was an insane number yeah,
And don't let the
through the-
numbers fool you, because you'll hear a statistic this year or next year that more businesses failed than have ever failed before because so many new start. I mean, what is it? What is stats? Like 10%. If you start a business, 10-20% chance you're going to last over a year.
yeah.
So if you just have a big influx of new businesses, there's going to be a big influx of businesses that fail. That's just part of it.
And that would be the same if, it's easy right now to have a business with inflation going and people continuing, because you can charge ridiculous rates and still keep the business. People are willing to spend. At the moment that people stop, because eventually people will, I'm telling you now, it's 100% chance we're going to hit a cap somewhere. Everybody has a limit. Eventually we will hit that cap. And if you hit that cap and the general public decides they're going to not spend anymore, that's when you're going to see those smaller businesses suffer and have to make some difficult decisions about their future.
Let's be ridiculous. It's a gross exaggeration, but if gas hits $12 a gallon, how many people can legitimately continue to go to work, continue to go, we're about, a 30-minute drive to AT&T Stadium to watch a Cowboys game. Like, hell, it's going to cost more to go to drive to the game than it is to pay to get in. That's where it'll start, is just, entertainment value. People are going to stop. But before, it's the prices in general get high, but now it's just transportation to get there.
Yeah.
In general. But the last point we have to make, or the last reason, I think is the one everyone's been screaming right now, and that's probably the most entertaining, that we're waiting for it, is corporate greed. That's why prices are so high. The big corporations are evil. They realize you can raise prices, and they're doing ridiculous amounts of it, and they're not giving people raises. That would be the obvious answer. And there's a lot of that.
There's a slight validity to that. And do I think all big businesses, especially big corporations, are greedy and bad? No. In some circumstances, are they? Sure. In these times right now, I'm sure they're taking advantage of it while they can. Just like we talked about with Eaton, other companies, they're going to capitalize on what Eaton's doing.
Yeah.
They're going to scoop up that business, and they may not go up 15%, maybe they go up 10%. They're still going up and still screwing you by going up, but they're just staying below what they have to. But that's where we always see, man, that big saying is the rich get richer. The inflation right now, the type of economy we're in, it hurts the middle to lower class.
Yeah.
Those are the classes that spend money, and probably even more so, it hurts the middle class, because the middle class is the one that has the majority of consumer spending.
If you have any interest in history at all, you learn this, that people like J.P. Morgan made tons and tons of money over the Great Depression. Mm-hmm. Whatever you think of him, evil capitalist or not, I mean, it's an arbitrary term. Like, what would you do in that position? I don't think he's evil, say the poor peasants, screw them type deal, but he spent a lot of money to keep the economy running after the precursor to the crash. There was a small crash that they thought was big at the time. They threw all this money at it to keep it going, and then there was a big crash. Kennedy, Jack Kennedy. Gosh, this is terrible. I shouldn't even brought it up. John F. Kennedy's father, who was the first commissioner of the Securities and Trades Commission, bought up all this stock when it crashed. He knew sell everything, because he knew that it was funny. He was getting during the 20s, was just all kinds of prosperity. Everyone's investing in the stock market. And then he got a stock tip from his shoe shiner, and he thought, if the shoe shiner is in this giving me tips and conspiracy theories, it's time to get out. So he sold just about everything. Crashed. He went back in and bought a bunch of stuff. Low price now that it crashed, and made a bunch of money doing it. And go back, and he did a lot of iffy things, but that's where like you said, the rich get richer. Go to every financial catastrophe, calamity. It's just knowing how to navigate around it. You buy low, you sell high. When people, my wife was saying, hey, it's stock market's going down right now. I'm like, well, if there's a minor crash, that's when you buy stuff. You don't want to sell at that. You just bought up high. You want to buy when it's low and sell when it's high. And people panic when it gets low. They'll see it go up, and then once it goes up,
you haven't lost any money. You own
not
the shares.
until you sell. Not until exactly. Not until you sell it. And I think with all of our shit with my 401k and everything was kind of infidelity is what we have it. Mm-hmm. You log in, it shows you the day.
It looks bad.
I think I lost $1,000 something one day, and I laughed. So I'm like, hey, we lost $1,000 today. She's like, what? I'm like, well, that's part of my 401k and everything. I'm like, just like you shouldn't even check it unless you're going to sell or buy something. Don't even log in and check it.
Yeah.
Because I can't imagine people have hundreds and hundreds of thousands of dollars invested. Just day to day. Hey.
Yeah.
I got 10 grand today.
You should.
I lost. Talk about day traders. It's the.
Yeah. I wouldn't want to. Today's not a good day to be a day trader.
No. I just went to Vegas. You just got back from Vegas. You might as well go. And that's what a day trader is. Yeah. You might have that one or two people of that made a ton of money, but there's a reason that the stock market, the Securities and Trades Commission, everyone allows that sort of thing because that's what gets the money. Mm-hmm. Vegas doesn't lose money. They make lots of money on people that just go and lose thousands and thousands of dollars. Yeah. That's how it works.
Yeah. All right. We'll see you guys next week.
Yep. Big recap. See you later.
Thank you again for supporting the Business and Beyond podcast.
Be sure to hit the subscribe button to be alerted every time we post a new episode.